Hello and welcome, everyone. Thank you so much for joining us today for this Surecomp and the Global Treasurer webinar, Empowering Trade Agreements, the Benefit of Automated Trade Finance. We're very much looking forward to sharing some knowledge with you today. But before we go into all of that, I'm here to just go over some housekeeping items with you. So first off, we will be taking questions at the end of this webinar, but you are free to submit those throughout the webinar as you kind of think of them, and you want to ask questions, just submit them in the questions tab in the bottom right hand side of your screen. Similarly, if you are having any technical issues, please do pop those in there as well, and either me or my colleagues from the Global Treasurer will assist you with that. Again, we will look at those throughout the session, but we'll only be answering questions at the end. And then lastly, I think the biggest thing for everyone, we always get this question, is this recorded? Yes, indeed. This webinar will be recorded and shared with you afterwards so that you can then share that with your colleagues who couldn't make it today. You will receive an email with that information later on. So thank you. And so with that, I want to introduce you to our wonderful panel, and I'm going to hand over to Andre Kasterman to do that, and he will be your moderator for today. So thank you, and I look forward to listening in.
Thank you, Antoinette. Delighted to be here and to work again with the Global Treasurer and having a wonderful duo today to discuss trade finance technologies. So my name is Andre Kasterman. I've been working at SWIFT and working a lot in the treasury space about 20 years ago when we launched the SWIFT Corporate Access, and in cash management, and then later in trade. And over the last 7-8 years, I've been acting as an independent consultant in trade finance technologies, as well as some payment technology. So delighted to be here with Olivia and Enno. And let me indeed introduce briefly both of them, and then we'll get on with the panel. So Olivia Hall is Treasury Manager at the Way Group, and her role is covering front office, treasury projects, and trade finance. So the Way Group, for those who don't know, is a mining global engineering business whose mission is to enable the sustainable and efficient delivery of the natural resources essential to create a better future for our world. And we're going to hear more from Olivia, of course. Enno is here with us as well. Enno Weitzel, Senior Vice President, Strategy, Digitization and Business Development at Surecomp, an ex-banker. And Surecomp is the leading provider of digital trade finance solutions for banks and corporations, whose mission is to enable seamless, sustainable trade for everyone. I've been personally working with Surecomp for the last 15 years on the multi-banking trade finance innovations that are launched when I was at SWIFT, and indeed that is some time ago. So Olivia, Enno, tell a bit more about yourself.
Okay, I'll go first. Thank you for having me today. I'm looking forward to discussing with Enno. Trade finance is obviously a huge part of our business, and we have been working with Surecomp since 2014. So I'm really pleased to be here speaking with Enno.
Well, thanks very much for the introduction, and it's a pleasure to be here. Feels great to be in that very expert-heavy group, and Andrew, you've done a great job of introducing this. Little more to say other than that I'm very curious to the discussion and looking forward to it.
Great. So let's start with you, Enno, and let's try to better understand some of the most pressing trade-related challenges that corporates face in today's uncertain world.
Yeah, indeed. I guess the world is truly uncertain today, and someone once told me that it's a little easier if you look at the world like on an espresso cup, right? There's the outer, the saucer, which basically you can't influence, and then there's the inner, where's the taste, which you can influence. Now, if we try to apply that magic concept to the challenges in trade that a corporate face, tariff, interest rates set by national countries, nothing you can do. You can take it. You need to manage and work with it. Compliance and regulatory requirements such as anti-money laundering rules, sanctions, embargoes, counter-terrorist financing, KYC, and we could go endless. Well, they are set by predominantly a handful of regulators. The US, Singapore, UK, Hong Kong, EU are among the ones that most of the corporates have to deal with. And the de-risking as a result of tightening regulatory requirements and banks pulling out of certain countries, basically leaving corporates with sometimes only one or two international banks covering a certain country. Now that's the outer saucer, right? As a corporate, you have to adjust your behavior to that reality. You can't really influence. So the feedback that we're getting from the corporates is that we have to be mindful in selecting the choice of your banking portfolio for two reasons. A, you need to choose banks that have very efficient compliance processes to get you across these challenges, and that can basically cover the globe with a well-working correspondent banking network. Now, then there's something that you can actively do, and that's always the good part of it, right? Which is closely collaborate with your counterparts to overcome these compliance or the regulatory challenges. So provide transparency about yourself, your organization, and encourage your corporate counterparts to do the same, to speed up or to facilitate the compliance check that the banks have to undertake. And then clearly the challenges that I also mentioned, like the interest rates, the tariff, etc., you can do a lot with respect to managing the uncertainty when it comes to FX, hedges, payment risk with payment guarantees. And I guess one of the key challenges that we also wanted to discuss today is how you can digitize your process and speed up the processes by getting rid of paper. And there's a lot you can do, and I'm sure we'll discuss a lot today. But maybe that my intro view to the challenges that at least we hear from our corporates.
Yeah, thank you. And very insightful and comprehensive at the same time. So let's hear from Olivia. Olivia, do you see those challenges as something that resonates to you in terms of the issues you have at the Way Group?
Yeah, I would say all of the above for what Enno has mentioned does resonate with Weir to a certain extent. From a trade perspective, one of the most critical barriers that we're seeing and we're facing is the lengthy compliance, KYC, regulatory requirements that our banks need to undertake in order to issue those trade instruments. And ultimately that can delay trade and potentially, frustrate customers. So the geography and territory where our customers are based can make it difficult for our relationship banks to fully support in certain areas, and that could be due to lack of SWIFT connectivity, lack of a local relationship bank. In certain areas where our customers may be specified, they need that local issuance. And understandably, customers are concerned about payment risk. They're concerned about making sure that their goods that they've ordered are arriving. But, it's up to us as treasurers and treasury teams to kind of manage that. We need to make sure that we are arming ourselves with the best relationship banks that we can that will support us in the territories that our businesses are currently in. And we also need to make it clear to our commercial teams that where in the past we could have maybe issued a bank guarantee in 2 to 3 days, with all the compliance and the KYC checks, we're talking, it could be up to 2 weeks to issue an instrument. Weir Group, we have a lot of smaller suppliers, so it can be difficult to assess creditworthiness of some customers in different jurisdictions and suppliers. So it can also be difficult for global banks to confirm some letters of credit. So the world that we're living in just now is much more heavily regulated, and we just need to be prepared and be as organized and up to date as possible as we can internally with our kind of KYC internal checks and our having that good, open, transparent relationship with your customers as well. So mining is a global business with heavy concentration in countries that have volatile currencies, strict capital controls. So risk management is obviously hugely important for us, and that within itself can come with sort of trade finance complexities that we just need to manage.
Yeah. So indeed, as Enno said, it's a reality that corporates and banks can't influence. It's coming from macroeconomics and regulatory decisions. So we have to live with it and basically try to use tools to remove frictions that have been created from and obstacles indeed in this new landscape. So Enno, if we look at how to overcome some of those challenges, we know that technology, the digitization of trade and trade finance, which are indeed two different things, can play a useful, a critical role. But first, what about the regulatory landscape? Hasn't one of the main hindrances in been the lack of standardized legislation around the use of electronic trade documents? We still live in a paper-heavy world, and with that now changing, what are some of the key regulatory and legislative shifts that are driving the adoption of digital trade practices?
Yeah, indeed, a super key question. But before I answer on the use of digital documents, I'd like to pick up on one of the topics that Olivia mentioned, which is the KYC aspect. And Olivia, you mentioned that in some of the countries that you want to do your business and you can't just pick the countries of choice because these are the countries where there's natural resources, so mining will be there, full stop. So the only thing you do is you can try to ease the process of getting over the KYC that is specific for that country. I quickly mentioned the 5 key regulators, and even if that country is not US, typically you would have to fulfill US regulatory requirements, because if the transaction is denominated in US dollar, like 50% of global trade, then US regulation applies. And while there's some alignment, like in the Wolfsberg group, there's still a lot variation in the regulatory requirements per country. So where we see one element where technology and digitization can support is in supporting the collaboration and transparency around the collaboration between the parties. So we do focus in enabling our customers to facilitate the collaboration end to end. So, and then we pick up on where the trade is organized. So when you agree upon doing a trade with your counterpart, the joint drafting, and then clearly also sending the guarantee issuance request to the financial institution. So we try to take the holistic view and provide our customers with digital solutions. So that's one part of where we think digital solutions can really make a difference. Now to the other question on what basically do we need to drive away from paper and enable true digital adoption. I guess a lot of things are happening around the MLETR, so the Model Law on Electronic Transferable Records. It's a bit of a tongue twister. The good news is that, as Olivia, you know, right, the UK is making massive steps on implementing this into national law. Now, it may be, so we're not in a legal university section, but there's a real practical impact. The vast majority of trade contracts out there is based on UK law. So with UK law now moving digital, many participants have basically all they need in their hands to go from paper to digital documents. Now, that's the legal basis that you need, and more countries are following the MLETR. Singapore moves ahead already, and a lot of countries will follow. G7 pledged to it, so there's good outlook that it will actually get there. And again, UK pressing ahead is pivotal. Now, what then participants need is easy to use technical solutions. Again, that's where we consider our job to be, so that the basis on the legislation can actually be transferred into action, right? And that issuing a guarantee, the certificate doesn't need to be physically delivered to the beneficiary, but can simply digitally be delivered. And when you said, Olivia, that it takes you 2 weeks to issue a guarantee, that's, by the way, what we also hear from our customers. We did a very quick survey asking our customers, how long does it take you? And more than 50% of the answers were more than 2 weeks to issue an instrument, which is massive because of the impact on the business that it directly has, right? So we hope to provide digital solutions to facilitate the collaboration to get the KYC process or the compliance checks done, to shorten that cycle, and then the actual delivery of the hopefully digital document to speed up the availability of the guarantee document at the beneficiary.
Yes, indeed. And by doing that, we are removing frictions that are basically getting us hopefully below the 2 weeks indeed, and removing costs as well from the end-to-end process. So I understand the KYC as well as the delivery are two of the key pieces here. So Olivia, how has this both the regulation and the compliance, which are of course very interlinked, influence your organization to make changes in your trade finance operations?
Yeah, so Anna's raised a good point about the kind of regulation background. So it is difficult for Weir to make proper changes in our trade finance operations without that legal restriction of international trade to be lifted to allow the electronic documents. So trade documents historically are such a tactile, complex area of the law as they cross international borders. And for that reason, original paper copies are still very much preferred. I think there was a UK government report that said in 2018, 28.5 billion paper trade documents were printed and flown around the world daily. I mean, that's staggering. It just shows the kind of historical, tactile nature of trade. So there needs to be that global standardized process for the use of electronic documents, and that would ensure that trade could move faster to reduce that friction that you mentioned. But it would also mean that we could harness technology and systems in order to do that effectively. But there's different regulations that are coming out. So the ICC had published its rules for uniform rules for trade digital transactions in 2019. That was due to set up protocols for supporting end-to-end digitalized trade finance products. But then, there were some countries that said that they weren't going to onboard that. It said commercially that country was not ready for that, and that was the US. And then in the UK, as Enno mentioned, that the House of Lords, the Law Commission, they're looking at the electronic trade documents bill. So there are small steps in moving forward with electronic documents, but there needs to be that global push to do that. But at Weir Group, we have our bank guarantee platform. We use CoreTF, which is one of Surecomp's older bank guarantee platforms. And we use it so that we could utilize and have that bank agnostic platform for the issuance of our bank guarantees. Now at Weir Group, we only use it for bank guarantees, but there are numerous functions at different trade instruments that you can use CoreTF for. And we use it so that we can reduce that paper trail that is historically there with trade instruments, and we can connect electronically directly to our relationship banks without having to use that relationship bank's particular own web-based platform. So there's many benefits for Weir Group in doing that and having that digital platform, and also we use it as a space in order to save all the copies of the guarantees and to have that central recording tool. So it is really useful to have that digital space, but for us to move forward, there needs to be that kind of regulation, kind of global approach to electronic trade documents in order to be able to do the full end-to-end process. But lastly, although we're using CoreTF in order to reduce the kind of manual workload that we have to do internally to issue a bank guarantee, we do realize that Weir Group are still issuing large numbers of paper-based trade instruments around the group, and we're still issuing that physical hard copy to the customer, to the beneficiary. So there are definitely ways that we can improve, but we do need a sort of framework around that to do that globally.
Yes, and I'm also very active with Enno in this area on the banking side. And indeed, as Enno said, much progress on the legislative side. UK Parliament is doing great work on this. G7 has been pushing. I'm also involved with Enno and the Surecomp team in the Paris Europlace French side as well. The Germans are getting their act together with ICC Germany. So the US is progressing as well. So there is actually a real push this time. And in parallel to this legislative progress, there is also new technologies enabling to achieve this. I think what will be key in the future is yourself, Olivia, the corporate voice telling the bankers, this is what we need, this is what we love. If we avoid a delivery of a paper guarantee and we can do it electronically via the same tools we already have, but rather than printing and shipping over courier, we can deliver electronically, that will be essential, because indeed the banks are now waiting, and I'm more working a bit on the banking side, but waiting for the voice from their clients to determine the priority of this.
I guess, sorry to jump in, Andre. Olivia raised the voice clearly, and what I hear from her is that it is unclear where the journey is going, right? So Olivia, you mentioned the EUR-DTT, which is yet another concept, and the MLETR is one concept. So apparently, the trade finance community needs to do some work in terms of being more candid, more to the point in terms of what is really needed, because there's, on top of to the EUR-DTT, to add complexity, there's the EUCP that says you can use electronic UCPs. Now, there's three concepts. Now, Andre, I know you know, and there are people that do know the very fine differences, but it's so many concepts that Olivia wants to support her business colleagues within Weir Group, right? Now, why should the trade finance community ask Olivia to be an expert in EUCP, EUR-DTT, and MLETR? It's not her job. Frankly, it's not her job. So maybe we need to take that feedback and clearly say, dear corporate treasurers, dear bankers, what do you need, right? So we will be, so as a tech vendor trying to facilitate, we will support EUCP and EUR-DTT. Well, let's see, because that is yet another instrument, right? It may be something else than the letter of credit. So we're less pushing on that one. We are pushing on enabling issuing digital documents under that model law, which each country needs to implement, because then you can get away from paper immediately, right? And we want to enable you with pragmatic, short-term usable options to move away from paper.
Yeah, and indeed, usually it's the lower risk approach to avoid changing the business practice, just digitizing pieces of the transaction, one after the other, depending on the client need, of course, but without changing the business practice. So, and we have seen many innovations in trade that were trying to be too ambitious and suggesting indeed too many changes, too many efforts from the industry, and it should not be. A guarantee should remain a guarantee, whether it's on paper or digital. At the end of the day, we're talking about improving the operational process, not the business process. So, and that's a bit the issue sometimes with some innovations, and I've been part of some of those as well at Swift. We were trying to introduce too many changes in one go, and then the industry doesn't follow. But indeed, the banks are now very keen, some banks at least, very keen to engage on this. MLETR specifically, not EUR-DTT, but really digitizing guarantees, some negotiable instruments like the bit of exchange from notes, depending on the relevance for the use case. So Enno, indeed, looking at those innovations, and the fundamental player is the bank or the insurance company sometimes, or the alternative lender. So I guess if they are not optimizing their internal and customer-facing trade finance processes, it can have a negative on the service delivered to corporates. How do you see this evolution happening on the banking side, assuming the corporate demand is very clear?
Yeah, that indeed is a very relevant perspective to take, because as Olivia demonstrates, it all starts with supporting the corporate business. Now, even within the corporate, Olivia is supporting the business unit within the company. So if the corporate interface from the bankers or insurance point of view is poorly designed, that can be a UI aspect and the process point, like cumbersome to use, difficult to onboard, well, then the corporate may just send an email to that bank and not use the digital portal, right? So there's always a plan B. Now, in the bank again, as you said, I've been at a bank. No bank wants to receive an email with some sort of unstructured data inside the email. They don't. So aiming to make it easy for the corporates to adopt digital solution, convenience is king. I mean, in the end, when we leave the office, right, we're all consumers, and we have adopted mobile phones because it's damn convenient, right? So UX is the one when we're consumers. On the corporate side, there is aspects like effort, quality, cost that are also considered. So if banks can address these points, then they will increase the quality. Now, why quality? Because if the process that a lender is applying is suboptimal or poor, it may be because more than 50% of all the transactions still come in via email. And that number, again, is not out of the blue. It is somehow backed up by reality, talking across banks. Large ones typically tend to have a much lower share on email transactions, but medium, small-sized banks, there's more than 50% coming in via email. So slow response time, errors in the processing, retyping, as a consequence, expensive fee for that manual process are the logical consequence. Now, beyond that communication around the single transaction, we know very clearly that a corporate treasurer would like to have transparency around the credit lines, managing the authorizations, the fees, the charges. So there needs to be some upgrade in that respect too. And that clearly is a task to us, right? Where we want to provide solutions that create transparency around fees, charges, that facilitate the communication, not only between the corporate and the financial institution, but as mentioned before, also between the corporates, between the financial institutions, right? And so that will enable treasurers to calculate the fees so that they know what they should expect for a transaction, that enable a precise forecast of liquidity, enabling to manage the risk within these countries that we've been talking about, and ultimately supporting the business growth, right? Going back to the point that Olivia made in the beginning, if it takes you 2 weeks, your corporate counterpart may be annoyed by that, and you don't want that.
Exactly. Yeah. So definitely it's not just about moving to paperless trade. It's about adding value and adding new insights, certainly from transparency, as you say, and some level of automation, at least removing manual processes that are not adding value, like reconciling or handling emails, not adding value at all. And that is exactly what we have seen over the last maybe 25 years. On the payments and cash management side, we have to be able to do it on the trade side as well. So Olivia, do you experience some of those issues with your banks? And what kind of advice can you give to other corporates listening today?
Yeah, so I would say for us having the CoreTF Bank Guarantee platform, it is so important that we've got a platform that supports our business growth. It allows the real-time information, as Enno said, the reconciliation with your fees, your view of your credit lines. But one of the most important things for us is that we have a centralized place where we can quickly do a review, pull reports, and we're able to see the guarantees that are still outstanding. You know, from a credit risk perspective, it's important to know where these bank guarantees are around our group, what territories, what customers. And it's also important to be able to have a quick look at expiry dates. Do you have any that are open-ended? You know, there's a cost implication and a risk associated with that. So having this centralized bank guarantee platform is very handy, very helpful, and all our subsidiaries can use it. But going back to the banking perspective, it is so important that you have that good working relationship with your bank. Communication is always key. So for us to be able to deliver to our customers, we need to make sure that we have those open channels for trade finance available with our banks. And you can only do that with partnering with your relationship banks on different trade finance tools and potentially special projects in certain areas. So you need to have that good working relationship. And understandably, you know, we're talking about a bank guarantee platform, that might not necessarily be something that the banks are, happy that corporates adopt. But ultimately, the banks are still receiving a benefit to working with you, working through these bank agnostic platforms, because they're still receiving the business. They can receive the real-time information straight into their back office systems if they choose to. So there are benefits for both corporate and bank in using, trade finance platforms. But, we have had situations, if we look at kind of trade in general, where we have worked with a bank, potentially we've put in a bank guarantee in a certain jurisdiction. The bank have come back and said, no, we cannot issue that particular credit line anymore. So there are risks about, with doing trade everywhere, even with your relationship banks, but it's how you manage that and keep that kind of open dialogue between your banks and your customers that is so important to us, especially in a world of trade, which is very time pressured. You need that good open working relationship with your customers and your banks. I would say my advice to other corporates would be obviously to maintain that good communication. But if you're entering into new regions, make sure that you've made your bank aware, that you can do any KYC in advance, that you've checked any potential local challenges. And it's also good to remember that your KYC only lasts 6 months with that bank, and then that bank needs to refresh it. So make sure that that's on your radar, that you have monthly review meetings with your banks on service levels, and challenge the length of time it takes for the issuance of trade instruments, and make sure you have a key contact at that bank that understands how your company works and the way your business operates, because each business is slightly different. Each business might be using different global, fintechs for their trade finance. So you need somebody that understands how your messages communicate, how they get to the bank, how they're processed. So it is important that you do partner and have that open dialogue with your bank.
Yeah. So I understand indeed the benefits of more technology into this is all about less manual processes, less errors from manual processes for sure, reduced paper, of course, and automation of some processes, basically, certainly on the reporting side, but also access to more real-time insights, because as the whole information is digitized in Core TF, in this case, in the central application on the corporate side, multi-bank, you have access to your latest information on a continuous basis, assuming the bank has indeed sent you the latest statements and transaction details. So more transparent world, more more up-to-date insights, less errors. I think we're getting closer and closer to what treasurers enjoy on the pure treasury side, payments, cash management, as I said. So again, this is a journey that is for me natural, and I think, yes, as the focus is now on digitizing the most complex flows, like those trade documents we were talking about, banks are now seeing the need to invest more in those capabilities to serve corporates on those specific flows. Now that payments and cash management and treasury and liquidity in general are highly automated. So I've been working in this. Yeah, sure.
So,
I know.
No, I'd just like to reflect on the one point, because again, Olivia stressed the KYC aspect, right? So we can see that from Olivia, your point of view is trying to support the business. It's, yes, guarantee is one part, but then there's so many adjacent topics that you need to be aware of, that basically you need to have that holistic view to everything that's adjacent. And while some people may think that KYC is something that you do once initiating the bank transaction, no, I mean, you just loud and clearly said, well, there's a timestamp to the KYC, be it 6 months, 12 months. You need to be aware of that. So you need to have so many data points in the end available to at your fingertips, so that you can nicely steer the business through the right channels to actually, with that one guarantee, support your business colleagues. So I guess we all need to be aware of that it is getting more complex literally every day.
It is. No, I would agree with that. And having that kind of the bank guarantee platform there allows you to store additional KYC information on your beneficiary. So if a bank did ask for it, it's right there at your fingertips. Sales, commercial teams can add that in, so it's there when the bank need it. And that's hugely important. You know, when you're dealing with hundreds of guarantees a year, there's admin behind all of this when it comes to the bank and KYC. So having that depository for that information is so important for us and can speed up a lot of time.
Yeah, it's not just the transactions and the transactional flows and the documents that need to be automated and digitized, but also the KYC, because it has become, with regulation, a repetitive process. Whereas in the past, it was a one-time process indeed. Let's look at another key dimension in the value we can add on transactions and on multi-bank systems applications in trade finance is the whole sustainability, I would say, wave. I sometimes compare it to the compliance wave we have seen over the last 15 years. It's still early days in sustainability and ESG, but it's going to grow, and the regulators are more and more active on this front as well. So it's a hot topic for sure. It's not going away, in my personal view. Edo, can you tell us a bit more on how you are supporting indeed those new requirements in your software solutions?
Yes, happy to do so. And echoing what you said, it's wave. It's definitely water that's rising, right? In a twofold perspective. Yes, it's coming. Yes, it's early days, and we can be sure that it's not going to go away anytime soon. That's why we are engaging, because we're not jumping on every new trend and wave, but we are selecting those that we think are here to stay. So ESG is one of them. So the ICC is running a sustainable trade finance working group. We're actively collaborating in that. And mid last year, there was the notion of why don't we try to put proof to the pudding and do a pilot on computing an ESG score per every single trade finance transaction. And we were, I guess, the first company that proved that that can be done automatically per transaction. And here the focus really is on automation, because stepping back, what is the ICC framework? The ICC framework basically says that per transaction, you need to have data points on the exporter, on the importer or buyer and seller, on the good, and on the means of transportation. Now you need to have ESG data points per these participants. Now, if you were even considering doing this manually, you can easily compute how much cost you were simply adding to processing one transaction. So the only way out is doing this automated. And what we did is we were, with the FinTech hub that we're bringing to the trade finance ecosystem, connecting the dots technically, right? That's our service that we can bring. So we make data available. So we took the data that is existing within a letter of credit, which is information around the buyer, the seller, and the goods description. At the point in time where documents are available under that letter of credit, you also know the ship, right? So basically all information is there within the data set of the letter of credit. But then we connect to rating agencies. Again, existing information. There are multiple rating agencies that have focus area that they cover. Some are super strong on the corporates, i.e. providing ESG information around the corporates. Other, in their name, right, so know your goods, for example, are super strong in the goods aspect. Yet others may be strong in covering 70,000 ships with an individual ESG rating. Now you may wonder, what's an ESG rating for a ship? It can be something like sustainability, equal working rights, is minimum wage paid for that on that ship with the crew. So there are data points available. Yet again, we think it's way too much to ask an individual bank or even the corporate to compile all that information. So we were connecting the dots and actually computing an ESG score for more than 1,000 trade transactions in that pilot that we run. So yes, we're actively engaging. Yes, it's still early days. So now in the second round pilots that the ICC is now inviting, there's a deep dive on the textile industry, yet again collaborating. And once the framework matures, we will bring this as a standard functionality to our Revo platform, because we all know that once it is out, it will become a quasi requirement. Now, while we know it's there and everyone intends to do good, there's one aspect that we need to be mindful of, because by implementing an ESG score, we don't want to raise yet another trade barrier. Think of, what if one of the participants does not have an ESG score or a low ESG score? What would the banks do? Would we not do business with that counterpart? Would the bank ask higher margins, higher charges for that? So I think there's still some design work to be done around that, and therefore just stressing, it is truly early days, but it is an aspect where the trade community needs to collaborate, and we can only invite everyone to collaborate and make it inclusive so that we can jointly shape the agenda and the roadmap, and then of course automatically use these insights.
Thank you. Yeah, it's fascinating because it's starting from scratch. Actually, it's not changing an old practice into a digital practice. Here is really introducing a completely new dimension into a critical business, trade and trade finance. So Olivia, what is your perspective on sustainability? Is it high on your agenda? What are you doing? What do you have to do, and what are you doing in addition to voluntary? Because there are two angles to this: regulatory and voluntary.
Yeah. So for Weir, sustainability is so important, and it is core to our strategic objectives and our strategy of enabling sustainable and efficient delivery of natural resources. Weir has its own sustainability roadmap to achieve this, and we have our science-based target initiatives aligned, so scope 1 and 2 KPIs, and we've just announced scope 3 targets, ambitious targets to tackle scope 4. So we do have our own roadmap for this, but whilst it is challenging to measure, our products in use by the customer is the area that we feel that we will have the greatest impact, and that's the cornerstone of our roadmap and our strategy. So we understand that, as Enno said, that Surecomp's working closely with the ICC and the working group. But going forward, we are currently using the CoreTF bank guarantee platform for all our bank guarantees, but we would like to move to Revo, the new bank guarantee platform by Surecomp. And as Enno had said, that will track certain ESG aspects, and that will really help us from a trade finance perspective. So we already partner with other providers who can help on ESG scoring and data harnessing, but if Revo can provide this from a trade finance perspective, then that will provide additional analysis for Weir. And it's so important for Weir to leverage as much as we can off the back of tech platforms that we currently use. So it is extremely beneficial, and we're looking forward to working with Surecomp and using Revo.
Yeah, that's demonstrate again how important it is to manage the data digitally. Because indeed, if you don't have this hub to manage all your data across your banks, you just cannot. As Edu said, you cannot do that manually. You cannot start measuring scores, ESG scores, which rely on so many data points according to evolving frameworks. So this is a typical example of digitizing, not only to remove the paper and to increase efficiency, but to do many more things that sooner or later we will be forced to do as businesses or as financial institutions, because regulators will grow the number of requirements in that space, as they have done on the AML side. So fascinating angle as well, because it's a new industry that is getting to us, and that we need a new reality also we need to take care of once we have our data in order into a multi-bank system like CoreTF and Revo. So moving on to the audience questions, I see a few projects, a few questions here on projects. Indeed, first one I'm just reading and discovering as now. So great projects like WeTrade and Marco Polo tried to address all that for the whole industry via blockchain technology. Why did corporates and FIs not support the initiatives if everyone is so keen to eliminate paper and increase transparency and efficiency? That's the first question. I wrote a blog about this, by the way, but I'll leave you to share your views.
Well, I can take that from my perspective. I mean, I knew the teams both at WeTrade and Marco Polo, and I really appreciate their effort. I guess one of the key reasons why they didn't pick up as expected is that, I guess, Andre, you said that earlier, a guarantee needs to be a guarantee and a letter of credit needs to be a letter of credit. Because if we ask Olivia to convince your counterpart about the use of a new instrument that is not exactly a guarantee and not exactly a letter of credit, it would be difficult. And both WeTrade and Marco Polo tried to put up a payment commitment, which is not exactly a guarantee, not exactly a letter of credit. And that was one of the key reasons, in my view, why it didn't pick up as expected.
Yes, and we had the same issue with other innovations like URBPO, where we introduced a new instrument and that was too much for the industry to swallow in one go, which is why indeed we have to go gradually, piece by piece, but small pieces that have an immediate impact without requiring corporates to renegotiate their contracts with their buyers or their sellers, basically. So thank you for this. Another question, is there a common digital format for transmitting issuance requests to banks that is generally accepted? Would that be the 798 or?
Well, unfortunately, I would get. Oh, Olivia, do you want to take that? I don't want to answer all of them.
No. I was just going to say that at Weir Group we connect via Swift or Bolero. It's, we have both channels, so there are different formats that the banks accept for sending our bank guarantee applications to the banks. Now, usually, as Andre said, the communication between banks that would usually follow the kind of Swift route, but I know, please jump in if you see anything different, but usually it is the kind of Swift standard that they would go for.
Well, so to be a bit provocative, I tend to disagree because of the adoption, right? We all know that, yes, Swift has issued that standard, and Andre, you were key to do that, but the adoption, even decades after the introduction, is there may be less than 100 corporates globally who are using this. So exactly. If there is one real standard, unfortunately, it's the paper standard, and that can't be accepted. That can't be what we aim for. So we at Surecomp, we're putting a lot of faith in the ICC now, coming up with the APIs for guarantees and letter of credit. Once they're out, we commit to implement on all our solutions, because that will be, if designed well, much more applicable to the wide adoption than the Swift score or other, say, niche solutions. So that's what we are pushing for, right? An open API standard with a predefined payload, that should be the solution.
I would agree with that. From a corporate's perspective, you need to involve time, resource, money in order to set up these bank guarantee platforms that we currently have. It doesn't take a lot of time to set this up when you've got a partner like Surecomp that can come in and help you do that. But the connection points historically have always been a kind of Swift or Bolero. However, although APIs have been around, for years now, it's only in the last few years that corporates are trying to adopt this and bring this into their treasury functions for, bank balance reporting. And potentially going forward, API might be an easier way for corporates to communicate and connect. They don't want to spend the money on Swift connections or other different connections. If they're already using APIs potentially already in their business for other areas, then it might be something that they build out into Treasury that then can help build that communication channel to the bank or to your fintech platform. So Yeah, I would agree. I know that over the last few years, from a corporate perspective, APIs do seem to be the new kind of buzzword, or the thing that we're considering and we're looking at.
Oh, that's very good, because indeed, then you can rely on a secure internet connection, and you avoid cost at the messaging level. And of course, you understand which costs I'm talking about. So another question, I guess, for you, Olivia, if you agree, what advice would you give to corporates who are looking to start their digitization journey from Excel? What are the first steps to take? Should corporates speak to their banks or to tech providers first?
I suppose it really depends how you want to play it. So at Weir Group, we have a number of relationship banks, and we wanted to be able to split our business between those relationship banks. As a corporate, if you didn't want to invest your time or money into having a bank guarantee platform, then the obvious solution would be to use the bank's own individual platforms that they will give you for guarantee issuance. But if you're a global corporate like ourselves, we have a number of different relationship banks, and we don't want to be in that position where we're having to log into loads of different platforms to choose what one to issue a bank guarantee through. So a bank agnostic platform made sense for us at that time. And we had the same as smaller corporates. We had them all on Excel sheets. So first of all, you need to make sure that you've got an internal way of reporting that, so that potentially your treasury team can amalgamate and they have overall visibility and control of the guarantees. And you need that policy step in place first of all, before you then go to a centralized platform. And that's when you would bring on your fintech or Surecomp to partner with to put your bank guarantee in place. But it's really how you structure your business, how you structure your treasury team that would come first. You would decide that internally, and then you would go out to your provider and look at all the different platforms that are available. For us, we wanted a platform that gave us good visibility, good reporting, was easy for us to function, for it to work, with a streamlined platform for our subsidiaries to understand and use themselves without relying on our corporate treasury team getting involved in every day-to-day transaction. And that's why we went and partnered with Surecomp. That kind of ticked our boxes. Moving to Revo, that's a completely different, it looks and feels much more modern, much more streamlined, and we're looking forward to kind of moving to that new updated platform. But if you're a small corporate, you only have a handful of bank guarantees, you might want to speak to your bank directly. There's different ways, and it all depends on the level of issuance that you do annually, as I'd say as well.
Yeah. Okay. Very good. So Enno, of course, corporates talking to you talk to a fintech expert, but also an ex-banker, so they get the two views in one go. But if we're looking at Surecomp, Revo by Surecomp now, what is the time frame for onboarding Revo for corporates?
Yeah, maybe before I get to that one, just on Olivia, your response, very structured, and I absolutely like the starting point of, you need to define what exactly you want, right? Because if you don't exactly know what you want, you will never find the fitting solution. So I guess that one needs to be stressed. So once you as a corporate have made up your mind, and I guess, so at least those corporates that come to our door, they would have already disregarded the option to use mono banking portals. So then typically it's the notion of being independent and being able to steer the banking relationship, allocate the business to where, from a corporate point of view, the business fits best, right? So then, well, it's a SaaS platform, right? Onboarding to Revo can be super easy. As Olivia mentioned, it's a ready-made, newly built platform that is, well, we always tend to say the UX element of enabling a super smooth user experience was the first priority to build the platform, of course, with all the functionality that a professional trade finance management platform requires. Onboarding can be done within a week, right? So I guess, Olivia, when we set you up, it was 2-3 sessions, and then you can hit the road running. And that's again adjusted to these days requirements from corporates, because when 20 years back, everyone was ready to invest in an IT project to get such platform up and running, these days, corporates don't want or can't convince their IT department to run a project. So we as a vendor, while we love our new solution, we needed to come up with a solution like that because it fits to the requirements of these days corporates, right? Business units want to get a solution, want to get a problem done. No one wants to run an IT project.
No one runs to the performance risk of developing yet a new complex application. You want to take the standard. And we have seen that in logistics with SAP since over the last 50 years, corporates adapt their processes to an ERP, such as SAP or Oracle, rather than reinventing the wheel. And the software as a service option indeed accelerates now the onboarding, as you said, to a few days. And what is the pricing structure of Revo?
Well, again, with these days, right, we're all used to freemium. So if you want to get started, you can do that. Just log on. It's a web platform. Log on, get started. If you're a sophisticated user like the Weir Group, right, managing global business, well, of course, there's a subscription plan. So the structure is, it's a subscription. You subscribe to using the services, Andre, as you said, right? And the more sophisticated features you require, of course, the higher the price that we ask for subscription. But I guess the important aspect to implement also for us was to make it available free of charge to get started. Why? Coming back to one of the questions that we have, if Olivia wants to engage with her corporate counterparts to streamline the KYC process, well, chances are more likely that your corporate counterparts, Olivia, log on to Review to amend or append, complete the KYC information that you require to get it through the bank's process, if doing that is free of charge. So if you needed to ask them to pay a subscription or a one-time fee to use the platform, they might just send you that email and you would have the manual work. So that they are, say, basically the sum of the topics that we discussed to let us design that also commercial model of making it available to boost adoption.
I think one of the other things that I would just add is that, you know, corporate treasury teams are renowned for being quite small. You know, there's not a lot, they're kept quite small, they're quite niche, quite specialized. And for that, we don't have a lot of resource to put into building a new model for bank guarantees. But that's why it's important that you do partner with a fintech that can kind of take that off your hands essentially and run that platform for you so that you can go about doing, you know, the risk management side of the business, which is more important than the kind of setting up an application for your bank guarantee platforms. And also the security side, you know, as we're not hosting that, it's through Revo's security hosted. So there's one less kind of thing that we need to think about, you know, that's all handled externally outside of Weir. So there are lots of pros for going with a fintech and going with a platform for your bank guarantee from a corporate treasury perspective.
Yeah, exactly. I remember a Cybers 2015 session on in-house treasury management or outsourced treasury management. Is exactly the same logic here. You don't want to fight for internal IT resources because the treasury team is indeed small and will not be able to support such development internally, and the IT people will have probably other priorities. So partnering with an expert provider is definitely the way to go. So that brings us, Olivia and Enno, to the end of today's webinar with the Global Treasurer. Thank you so much for this enjoyable panel and discussing the digital trade innovation. It's great to have you. I hope the audience enjoyed the session as much as I did, and I would like also to thank the audience for the great questions we got and which definitely enriched our discussion. So thanks to everyone involved. Enno, Olivia, looking forward to continue this industry transformation, as we used to say. Thank you.
Thank you.
Bye-bye.
Thank you.